Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Commodity and financial markets delivered some rather spectacular gyrations over the weekend, forcing investors to review how they're going to deal with the certainty of uncertainty enveloping global markets. But first this week, our local coverage will be dominated by Wednesday's fourth quarter labour market report. If it brings a notable improvement from the expected no-change 5.3% jobless rate, then the recent high inflation rate of 3.1% will get more of the RBNZ's attention at its February 18th meeting. Also this week, the RBA is meeting tomorrow to review Australia's monetary policy settings. A 25 basis points change is now expected, taking this rate to 3.85%, a sharp adjustment in sentiment following the strong December CPI data, which came in at 3.8%. Elsewhere, important labour market data will come from the US at the end of the week via their January non-farm payrolls report. Markets expect a modest 70,000 jobs gain, slightly better than the disappointing December 50,000 rise. Before that, there'll be their JOLTs report, the ADP jobs report, and the layoff data for January. Then we'll get the first February consumer sentiment report, and it is expected to stay near its historic lows. And there'll be many more PMIs reported this week, and the EU will release its CPI data update, the ECB will review its policy rate, India will too, as will England. In Japan, they'll release business sentiment survey results. But the week has already started in China, with Dow's official PMI survey results released. Their factory sector slipped back into contraction, indicating their December expansion was a rogue result. Their services PMI also reverted to a contraction, and they will be very disappointed. Neither was expected to reverse in January. The non-official PMIs will be released later today. Over the weekend, Taiwan said its economy expanded at a more than 12% rate in the fourth quarter of 2025 in a spectacular release, and their best quarter ever. That means for all of 2025 was up 8.6%, even better than the outstanding 2024 gain of 5.3%. No wonder Beijing covets the neighbouring island nation. In Japan, they reported that its retail sales unexpectedly fell in December, although it did revise up its November retail sales results. In South Korea, the pandemic recovery accepted, their exports rose at a record 34% year-on-year rate in January to a massive $66 billion. This is largely a result of booming tech exports to China and the US, and it sets up 2026 with a great start after 2025 exports also hit all-time records. Indian bank loan growth is still rising very fast indeed, up more than 13% year-on-year in its January 9th data. In the US, Trump said he'll appoint Kevin Warsh from the conservative Hoover Institute and a member of the billionaire Estee Lauder family to replace Powell when Powell's term ends in May 2026. The choice seemed to trigger the precious metals sell-off. Trump once thought of appointing Warsh in 2017, but pulled back on doubts he would be compliant. Since then, Warsh has become more MAGA. US producer prices rose 3% in December from the same month a year ago, defying expectations they'd fall to 2.7%. Core data was up 3.3%, the fastest rise since July. Meanwhile, in Chicago, the region's PMI made a spectacular recovery, one quite unexpected. New orders rose in this survey, employment surged. It is in complete contrast to the prior 25 consecutive months of decline. However, it will be worth waiting a month to know if this isn't just another rogue survey, one they've had every 2 years or so. The last such unusual surge in November 2023 wasn't sustained. In Europe, Eurozone economic activity rose 1.5% in 2025, up 1.6% in the wider EU, up from 0.9% in 2024, and better than the European Commission's projection of 1.3%. Resilient household consumption, lower borrowing costs and easing inflation, and a surge in exports to the US all combined for the better result. Germany and Italy were the laggards, France about average, and Spain expanded at double the overall average. The US Treasury 10-year yield is now just on 4.24%, unchanged from this time Saturday, down 2 basis points for the week. And the price of gold will start today, little change from Saturday, at $4,888 an ounce when the big crash happened. Silver's down to $84.50 an ounce. American oil prices are up 50 cents at just over $65 a barrel, while the international Brent price is now just under $69 a barrel. From a week ago, these prices are up $3.50 a barrel. And the Kiwi dollar is down 10 basis points against the US dollar from Saturday, now at 60.3 US cents. That's a weekly appreciation of 100 basis points. From the start of the month, it's up 300 basis points. Against the Aussie were unchanged at 86.5 Australian cents. Against the euro were also unchanged at just over 50.8 euro cents. That all means our trade weight index starts today at just on 63.9 and down 10 basis points from Saturday, up 80 basis points for the week, up 200 basis points for the month, almost all because of the US dollar devaluation in global markets. And the Bitcoin price starts today at $77,404 and down a very sharp 6.8% from this time Saturday. That makes it down 18% for the week. Volatility over the past 24 hours has been modest, however, at just on plus or minus 0.8%, with all the fall coming on Saturday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.